Well, hello, hello. Crypto Rolly back in the building. Bitcoin, Bitcoin, Bitcoin. A lot to talk about today, so I won't spend too much time speculating or giving you my life story. Where has Rolly been? Doesn't matter. Rolly is back. All right, guys. Looks like we are consolidating after a nice run up, but we are under critical resistance. So, guys, have we topped out at a local market cycle, or are we consolidating before the breakout? Live technical analysis, price predictions, and trading. This is Crypto Rolling. All right. Hit the like, comment, subscribe, tick the bell for notifications. This is not financial advice. Remember, these are my own ideas and opinions on the market, so please do your own research. Trade at your own risk. All right. Bitcoin is up 4% in the last 24 hours. The real volume, 1.6 billion. Somewhat decent, even though it really, though, has felt slow and slow and slower. You can see the volume has been dropping off as well. But better volume than most weekends, I will say that. And actually, we are consolidating, and I'll show you this. We're kind of like in a range here. This kind of makes me worried that we have more room to fall as far as volume. We'll take a look. Ethereum, 3%. You can see nice little gains across the board here. Cardano, 5%. All right. So Crypto Fear and Greed Index, down to a 39. Let me give that a refresh. Yes, down to a 39. People are fearful. They haven't been too greedy this entire rally ever since the pandemic sell-off. So, guys, as long as we're fearful, there could be more room to the upside. You can see often when we are super fearful down here, the month after the sell-off, we stayed down in the fearful region for quite some time. So there was nowhere to go but up as far as the greed index. And with that rally, we continued. It wasn't until we got slightly greedy that we saw the pullback. We've been hanging out in this neutral, slightly fearful zone as we consolidate. But, if we were very euphoric and we were consolidating and people were screaming for, a bull run, maybe that would be more of a counter trade signal to the downside. But considering we're consolidating and we're fearful and people are looking to short, we could get another pop up possibly. Just looking at both sides of it. Of course, at the end of the day, this is just one metric and we got to look at the charts. So a lot to talk about. Spend quite some time. Right off the top, let me go over to a cleaner chart, maybe my BitMEX chart. Okay. And I had drawn out a falling wedge pattern here, and we did break out of it. Didn't really give us much of an opportunity to jump in. This candle here, I was looking for, a 4-hour candle close, outside of that resistance trend line. Also had a moving average lining up. So yes, yesterday I did post on Twitter, my one post in an entire week, that, I wanted to see us break this descending trend line, as well as the yellow 21 EMA, the pink 200 simple on the 4-hour. They were all lining up there, so a 4-hour close above could get a little bit of a rally. And this happened while I was asleep, but like I said, it didn't really give you much of an opportunity. You would have had to buy in down here, which was dangerous as well because you were still clearly under a resistance level, still in a downtrend. So wasn't the best opportunity for a long there, but you can see we have broken out of this wedge. Now, the issue for me, just, if we're looking at a lower time frame, like what to do at this moment, we still have a lower high here. And you know, unfortunately, even if we break this level here, you're still putting in lower highs. So to me, this looks more like some type of you know, larger pattern of consolidation forming. So there's a lot of people looking at a, you know, a descending triangle. You can see people talking about that. You can draw a flat line of support there. And how about let's change the color so we can look at this like that. All right. And we can draw a downtrend like that. All right. So descending triangles typically do have more history of breaking down, but they don't have to. It's just more often than not they do break down. You have a descending triangle that played out here, and then you have the classic 2018 descending triangle right there. So you had the flat line of support, downtrend, broke down, flat line of support, downtrend, broke down, and people are looking at this as a possible descending triangle. Now, if you take away this one here, to me, I see, you know, I see a higher low there. Whether you're using the wicks or just the candle bodies, I still see something that looks more like that as of now. And using your candle bodies, we can leave that there. So, you know, is it a descending triangle or is it more of a symmetrical triangle? Patterns, patterns, patterns. To me, I like my horizontals a little bit better, and I will show you that on my Bitstamp chart. Just want to knock this one out of the way. So you can draw that like that. However, I would say in general, and we'll change the color on this maybe to that, we're looking at more of a, you know, just we can use horizontals to look at this range that we're in here. We'll do from here to there. Something like that. All right, we'll change the color on that one. So to me, it looks like we're in some type of, you know, triangle, symmetrical or descending, but really we're within, you know, these levels here. These were just roughly placed. It says what, 98, 94. I think I have 9800 mapped out on Bitstamp using the candle body top there and top there, so you could even drag that down a bit. And then we have this level here at 86.21. So between these levels, you could really get a consolidation. And it doesn't matter what the pattern is. We could just travel sideways between these ranges here. And this could go on for a longer period of time than we would like. Bitcoin has a way of, you know, having these explosive moves where people FOMO in and, you know, it's just like crazy, got to get into a trade like, you know, now. And then it will just have this long, drawn out sideways action that just like, you know, really hurts the soul. You know, easy way to get chopped up, you know, losing money when the price is just going sideways. Or it can just bore you to the point where you stop paying attention and then it takes off. So we could do something like that, you know, whether it's a sideways, you know, range there, or it's an ascend or a descending or symmetrical triangle, either way. And the volume has been decreasing. You can see that. Hopefully it doesn't continue to decrease, but that would be, the more it just continues to decrease, more of a sign of consolidation. If it breaks this level here, we can look at lower levels. Or if it breaks that 9,800, 10K to the upside, 10.5, I'd like to see the volume increase with a breakout, whether it's to the upside or the downside. Of course, you know, as a Bitcoin hodler and believer of Bitcoin in the long term, I'd like to see the price to the upside. But as a trader, I have to be prepared for the downside. And to confirm a breakout, I'd like to see the volume increase with that breakout as well. So that's my sideways consolidation. And I guess the summary of all of that is, if we are going to range sideways, we need to look at a buy the support, sell the resistance type trading strategy. Not looking for a breakout now, not looking for 14K or 6K now, looking just to trade the range. So we were at the bottom of this range and we have seen a bounce. Right now we are right in the middle. So if you're trading the range, price in the middle is not the best place to take a trade. But once we approach a level like this, where you have a clear downtrend of resistance, or even if you break that and then you have this horizontal resistance, selling resistance, looking for another bounce down would be ideal. So you could have something like that and then it could come down, and or it could go up higher and then come down, and we could just be traveling in here. So looking for those levels of support and resistance, you can take your trades within the range until you actually break above or below. Now, if we break below, let's take a look at some Fibonacci's. That was what I wanted to do. Fibonacci's. All right. So hit that like for me, guys. Leave a comment. We'll take a look at the Fibonacci. Like I said, there's a lot to talk about, but I wanted to knock out the sideways consolidation, whether it's the triangle or the range, and trading the resistance and the support within that range. Now we'll look at the Fibonacci retracement to see how far we could potentially go to the downside if we do break to the downside. So let me hide the volume there, and we'll do, let's see, from the bottom to the top there. So your swing low to the swing high. All right, so we have bounced off of the 0.236 around 8,500, lining up with that range there. And then to the downside, 0.382 is going to be around 7,600. I've been talking about 7,800, but in this region would be the 0.382. You could always wick and then close back above 78 or 8K. So anyways, this general region where you also see that trading range, how you had resistance and you finally broke and had a nice rally. You can see how there was some support there. And if you extended that, you can see there was a resistance there as well. Your 0.5 is at 6,800 roughly. This is, basically where you had resistance level there, flip support here. And you also had support level down at the bottom here and down there. So you can see where this actually, these fib levels from this bottom, oh, it moved a little bit. Okay, so from this bottom to that top, how it plays out in previous price history as well. Now the 0.618 is your golden retrace. That is down at 6,000. I would say that for us to continue a bull run now, if we're going to continue, this rally is going to be the start of the bull run. I want to stay above 7,800 to 8K, and that would be above this level here. Now if we lose that, 6,800 is a horizontal level that we've been looking at, and that would maintain a you could have a low, a higher low, bounce from that level and continue on, and you would still be putting in a higher high, a higher low, and a higher high. That could still play out, so it wouldn't be too bad. Now under that level there, I'm starting to get worried, and I was saying 6,800 was going to be that last final line in the sand. However, your golden retrace down here at 6K would be actually the final line in the sand. 6K is just that important level that we were holding on to for dear life here. We finally lost it, got above it. On this downtrend here, we still maintained above 6K, so that was good to see. We had this freak black swan event, dumped down to the bottom, rallied up. As long as if we came down here and bounced, it wouldn't be the best looking thing, but the golden retrace is known to play out often with Bitcoin, so it is still a possibility. But if you lost that golden retrace 6K level, I am definitely worried about Bitcoin's future. Above this, though, between 6K and where we're at current price, 10K, on a macro level, it's just a large accumulation region for me. If you're an investor, dollar cost averaging, I think, anywhere in that region has been a good opportunity to just buy and accumulate. I think in the long run, you'll definitely, it will pay out. In the short run, you're going to have these swings. So, you have to be aware of that. And so all of this plays out to, let's go to the Bitstamp. The 6K is exactly where we have our weekly 200 EMA coming up to as well. And, if we can maintain that level, we're still good in my books, okay, in my opinion. Let's go to the weekly. So I just showed you that the 6K level is where that golden retrace lines up. Well, your light green 200 EMA is currently 6,075. Your weekly pink 200 simple is at 5896, so 5,900. With the next week or 2 weeks, it definitely will it'll end up crossing 6K as well. So that golden retrace is lining up exactly within here. It is possible that we continue sideways for more time. We are in a massive, consolidation. It's a 2-year consolidation. I'll just draw it real quick. We're all aware of this, pattern here. Symmetrical triangle type thing. Hopefully it's not too busy with my horizontals. So something like that. You can see where you bounced here, bounced there. We wicked below, but we ended up closing above, and then we have this downtrend that we were looking at. So it is possible that we just continue through this way and don't break this downtrend all the way till, 1 second, it's in the way. This is coming in December 2020. So if we come to the pinnacle, or sorry, not the pinnacle, but the apex of this triangle, that would be the end of the year. There is a possibility that we just sideways chop to the end of 2020 and don't get a breakout till then. I would say, we're already close to 70% of the way there. Often these symmetrical patterns break out, around 70%, 80%. They don't usually go to the very end. So, any time between here and here, I feel like is fair game. This is between now and the end of the summer. To me, is a fair game for a breakout. However, the apex would be coming towards the end of the year. So could we come down to that 6,000 level? Is this just another, a little bit of a market cycle, a mini market cycle within a larger market cycle, where you have your blow off top and then sell off, capitulation, whatever. You had this rally here and then we sold off, another one down. So, it's very wavy, we haven't had a continued rally like we did from here to there. So we could continue back down, bounce off that 0.618, possibly. Okay, that is the macro level, all right? How long has it been? It's already been 18 minutes. Oh, man. All right. Guys, I want to show you the hash ribbons real quick. Like I said, there's a lot to show, a lot going on. Let me throw up the hash ribbons. Let's see. Because the hash ribbons have flashed the minor capitulation. Move this back here. So they have flashed that red minor capitulation, which often you see a bit of a sell-off that comes with that. You can see one here. We also had a bit of a sell-off coming back in. Actually, this one, Okay, yeah, it was. So you had a minor capitulation there. All right, with that one. We had another one here with that sell off. Um, and you had one back here. So these usually play out. And this is lining up with post halving, where typically post halving you do see a bit of a minor capitulation because the miners cannot afford to mine at a profitable cost. So they make it twice as hard to mine, so it makes it costs twice as much electricity, and at current price, 9,000, I think, to be able to mine at a profitable level. After the halving, they say was around 14,000. So right now, you would be mining at a loss, and smaller mining farms can't keep up, and they end up having to sell their Bitcoin. This is the theory, and you do see the minor capitulation. So that would line up with the theory that we see a downside target of something in the 7K, and at worst case scenario, 6K region. However, what I will say is once that minor capitulation is over and you get the buy signal on the hash ribbons, the buy signal has been a great indicator in the past. You can see that buy signal was just, life-changing money. This buy signal was the rally, going up to 14K. You had a buy signal here when you bottomed there, and then another buy signal when we bottomed down here. Okay. So typically the buy signals have been great. So if we can make it through this little minor capitulation and we get another buy signal, that could be, the opportunity to finally break above and attempt, 20K. Okay. So that wraps that up. I think I was able to summarize that pretty quickly. 21 minutes. All right. I covered the main general ideas, and I'll just do a quick indicator breakdown starting with the weekly. We can throw my Ichimoku back up. We will skip the Bollinger Bands. I've been skipping Bollinger Bands because the middle BB is basically the same as the 21 EMA. The middle BB uses the 20 simple. It's usually very close to 21 EMA, so the same thing, can be applied there. Now, you won't be able to see the upper and bottom ranges, but we can use the Ichimoku clouds possibly to see a different perspective. But the Bollinger Bands and moving averages are very similar, just a slightly different perspective. And the Ichimoku cloud also uses moving averages, so you'll see the same thing line up. But again, a different type of perspective with the clouds and different levels sometimes as well. Now, I have, there's a debate about the settings. I have recently saw someone in the comments talking about the settings. What I have to say about that is I used to use the default settings quite some time ago. I switched over to these crypto settings that, some people that I learned from were also using. And these crypto settings I'm using are used to accommodate the 24/7 market, where I believe the default settings were used more traditionally with stocks. So this one has been modified for 24/7 market. However, maybe there's another setting within crypto that people like as well. And the thing for me, though, is I see it using these settings, I see it line up quite often. You can see with this weekly how well we were held down by that blue conversion line there. You can see that we had resistance here. We're hitting resistance on the cloud there, resistance on the cloud there. So, it bounced off the blue conversion line there. It was resistance here, resistance there. So it plays out enough for me to use it as an indicator. Is there a setting that shows something different that's even better? Possibly, but you know, there's a million indicators, and if it's showing you levels of support and resistance, to me, that is all that matters. Real quick before I jump into those indicators, I do want to point out these horizontals. I don't have to go in depth about them, you know, just to put these on your radar. I am seeing it play out right now. We have that 10.5 level, you know, that's that peak there, level to beat. We have the 9800, that's your candle body highs here and there. That's definitely a level that I want to close a daily above to attempt at 10.5. We have 9200, which we are consolidating just beneath right now. You can see that on the 1 hour we are consolidating, trying to break 9200, so we'll have to see. We are putting in that lower high, but if we can close above 9200, consolidate above here, find a base, you know, above 9200 and break that level there, that, you know, will give me some hope that we can march up and, you know, attempt, you know, maybe up here at 9500, lining up with that trend line of support flipped as resistance. And you can also see that downtrend coming from the top 20K. Not diagonal's not a big deal, but just to keep them there as a reference point, you know. So going back to that, you know, horizontals, looking at that, we have hit that 9200 level. You can see that 9200 played out previously as well back here. You can see that resistance support flip previously, so that's why we were using that, and now we're hitting resistance as well. To the downside, 8400, that was that support level there, support. So, you know, we could bounce there. So like I say, you know, another way of looking at this is just a range between 9800 and 8400 within there, like I was showing at the top. And then we have 7750, that was resistance. So you had support. There was a range between 8400 and 7750 back here, and then you had that resistance on 7750. Resistance broke out, so that would be that 7800 level we've talked about. To the downside, right here it says 6900. Earlier we were talking about 6800, so $100 give or take. That was that level there. Okay, so those are the horizontals of interest. We're jam-packing everything into one video. If you are still here, let me know. Oh, man, 27 minutes. All right, let's do the indicators, and I'm out. All right, maybe, you know, tomorrow's video. And I'm trying to be back, get my routine back. You know, it's like going to the gym. You know, you miss a couple days, next thing you know, a week has gone by. So I'm trying to get back in my workout routine with crypto. All right, so on the weekly, we are above the blue 50 simple. This is at 87.78. So we want to close back above that level. Still above the yellow 21 EMA, bullish. All right, on the macro, above 21 EMA is bullish. So I am not too concerned. I'm just looking for a good opportunity for a long, possibly. Or, you know, we could play that range that was chopping between, you know, we were showing at the top. You know, on the Ichimoku clouds, we are seeing this resistance from the cloud. The cloud's at current level 95.43. Want to break back into the cloud and then march to the top of the cloud, coming in around right now 11,000, and it will move its way up all the way to 11,400. You have support with this orange baseline at 88.65. To the downside, 71.75. All right, the stochastics on the weekly, they did get to cross down on the fast moving, but the slow moving never did cross. So we haven't had that confirmation on our weekly stoke, and this weekly stoke on the fast is hinting at another cross back up potentially. So we could just flag out and then continue higher. However, you see that weekly stoke come down, you know, that's definitely going to imply maybe more of a longer downtrend, and you know, maybe we could come all the way back down to those levels we talked about. Going over to the daily, looking at the daily, fast moving stoke got the cross up, and the slow moving hinting. So, one thing at a time. We are looking at the blue conversion line on Ichimoku Daily, 90.78. So this daily candle as it stands to me looks pretty good from a daily perspective. We were in that falling wedge, breaking out of it, got the cross there, looking for a cross here, closed back above that. That actually doesn't look too bad as of a setup. We could march back up there, and this would be your support level down here. If you lost that level, you could see 79.65, 8K. Okay, so if you took a trade here using daily candles, you could definitely place a stop beneath that level there using the daily. Let's look at our moving averages real quick. The moving averages, you are hitting, you do have 9,200 resistance to be aware of. So I think it would be better to close above 92.10 on the daily with, all that previous information I showed you with our stochastics combined with the Ichimoku. So that would be like, all of the check marks crossed off. If you do, close beneath it, it is still good to see us close back above the yellow 21 EMA, and we still have a couple of the other check marks checked off. You just wouldn't have that blue 10 simple. So, you're not going to always get 100% confirmations, but considering 9,200 was a resistance level on the horizontals, plus you have a lower high, to be safe, you would want to close above that, I think, to be safe. Okay, that is that. We'll skip the 12 hour. No, let's not skip the 12 hour. 12 hour, close above the yellow 21 EMA, consolidating above it. Your next level resistance is 92.44. You want to see this continue up. The 12 hour did get the cross from the bottom, so the 12 hour, then the daily. So you do on the slow moving do have that. We did get the initial signal on the fast moving 12 hour down here. That was your early signal. You would have had to had patience, a stop lower. When I say patience, you got the cross there, but you did kind of have a dip there. So, if you were more patient, you waited for maybe the confirmation down here, but it did spike pretty high in a pretty short time span. So it would have been hard to catch, but you did have these signals. I haven't been looking for shorts the past several days because I saw how low the 12-hour Stoch was. I saw the 4-hour Stoch was low, and I saw the daily was getting close to that point of moving up. So I've been more patient looking for longs. If we lose that critical support down here, then maybe we can look for more of a downtrend, look for opportunities with shorts. Let's just go down to the 4-hour and finish up. 4-hour, we are consolidating above the red 100 and orange 50 EMAs and looking for a potential breakout. We just have that horizontal resistance right there. So, had we been consolidating above that level, I would have been more inclined to, possibly take a little bit of a bull flag breakout attempt there, but we're consolidating underneath the resistance. So I want to be patient. No rush right now. Your 4-hour Stoch on the fast moving high. So, hinting we could get a little bit of a pullback, get a bounce, in this region around 9K, yellow 21 EMA on the 4-hour possibly, and then get a bounce that would coincide with this coming down and then curling back up. But your 4-hour Stoch on the slow moving still pointed up and plenty of room to go. So guys, this has not crossed down. We could see a break of 9,200, and I think around 9,500 would be safe. 94 to 9,500 to the upside there. All right, so that's enough. 35 minutes. Been quite a video. Hopefully I didn't spend too much time repeating myself about the descending triangle sideways range. I feel like I did spend a lot of time talking about that, but we talked about a lot of good things, and like I said, we do often see a consolidation after a large move. So to me, this has looked like more of a just breather, people taking profits, You know, there was a lot of speculation with the Bitcoin halving. So, you know, this doesn't look bad. You know, it looks like a sideways consolidation. You know, but this also was a potential sideways consolidation that ended up breaking down. But you also, that was end of February. That was when, you know, this is when the senators were selling off a lot of their stocks already. The pandemic had already started. You know, we didn't start, you know, getting that. We didn't have the Black Swan event till here, but you know, China was already dealing with the pandemic up in this region. So, you know, the people that were in the know were already selling back here. So there was that. Had the pandemic not happened, maybe we continued higher there. Okay, so and right now, you know, this people want to say descending triangle. Looking at the 4 hour, I don't see it so much. You know, to me, this one was a little bit more obvious. You know, unfortunately, it's not as obvious until it's almost already played out. When it was here, you know, it wasn't an obvious descending triangle. When it was here, it wasn't an obvious descending triangle. Back, you know, all the way down here, yes, it was. So, you know, these things can take some time to play out. So that's why for now, before we speculate too much on the descending triangle, I would just worry more about your horizontal range between that 98 to 87, 8600. All right, that's it for me, guys. I will see you hopefully soon. All right, rolly roll.